as the bull market continues to take shape. Is this investment firm about to get wrecked by shorting a Bitcoin miner? Welcome back, everyone. Kerrisdale Capital, a TradFi investment firm that has decided to metaphorically sacrifice themselves on the altar of Bitcoin through shorting Bitcoin mining stocks. Anyways, let's dive into it, and let's see what we pull up. So today, we launch a war against Bitcoin miners, an industry of snake oil salesmen that are incinerating both investor capital and the environment and should be banished from America, much like the Chinese RTO frauds that we helped kick out a decade ago. And of course, you could see this thread is like 1 of 10. Don't care, never selling. But of course, this is going to be in the show notes for you guys to go through the whole entire thing. So you could see they wrote letters to the Navarro City Commission in Texas, letters to Texas state senators. And of course, this all has to do with Riot Blockchain. Now, Riot Blockchain is a publicly traded company. And in all fairness to Kerrisdale Capital, I do think that maybe going into a bear market, they'd have a good case to short the shares. But going into a bull market, it actually doesn't really matter. And again, this is not investment advice, but it doesn't actually matter what the earnings are of the underlying asset in a bull market, because essentially something that we've learned over time is you don't go against the market. Okay, so when the markets are pulling higher, it doesn't matter how correct you are about a company's financials. Anyways, let's dive into it here, because there's a lot of different things to cover. And of course, Kerrisdale isn't without their own skeletons in the closet, which we will explore. Anyways, of course, right? We see the tweet storm. We see the tweet storm from Kerrisdale, right? Talking about how terrible Riot is, how they're snake oil salesmen, blah, blah, blah. But of course, right? Why are they saying this all of a sudden? Because they're shorting the Riot shares. That's right. Riot Platforms, a prominent Bitcoin mining company, saw its stock decline on Wednesday after a well-known short seller, Kerrisdale Capital, announced its short position. So it's no surprise, right? This is how it works. These companies put out their FUD, okay? And the reason why they do that is because they've taken a short position. And essentially what a short position is, they are betting as an institution that the price of these shares will decline sooner than later or within a specific time frame as specified by their short position. Anyways, Kerrisdale criticized Riot's business model, describing it as a dysfunctional hamster wheel of cash burn. The firm argued that Riot, like other U.S.-listed miners, relies heavily on continuous ATM issuance to fund its operations. For the people who don't know what ATM means, it just means at the market offering. It's a way for publicly traded companies to raise capital by selling shares on the open market at current prices. Kerrisdale's strategy includes holding Bitcoin as a hedge against their short position in Riot. So this is interesting, right? So they are Bitcoin proponents, but they aren't mining hardware proponents. And we're going to talk about that in a bit. I don't actually think that even though Kerrisdale has a terrible track record, which we're going to take a look at in a second, I actually think that had they have done this in a market that was about to decline, they'd probably be in a better position. But I don't think this is going to end well for them in this particular case. Either way, let's continue. This dual approach underscores their belief in Bitcoin's long-term potential while expressing skepticism about the mining firm's financial health. On the day of the announcement, Riot's shares fell more than 6%, making one of the worst performances among crypto-related stocks, despite Bitcoin's price rising. The development comes just weeks after Riot initiated a hostile takeover bid for Bitfarms, acquiring a 9.25% stake to become its largest shareholder. Riot's aggressive move in the industry highlights its expansion ambitions, even as it faces scrutiny over its financial practices. Okay, now before we get into all the details of this, let's just get a little background here on Kerrisdale. I always love Reddit. It's such a great place. Some could describe it as a dumpster fire. Other people can describe it as a circus. Maybe it's a theme park. Anyways, whatever. I love Reddit. And of course, right, 2 months ago, people started asking, so who is Kerrisdale Capital and what does their history entail? All right, so having researched their short positions dating back to last year from the Twitter feed, I now feel more confident about investing in the stocks they're shorting. Here are stocks they have shorted so far since last year and where they stand today. So yeah, if we take a look over here, they've unfortunately had some absolutely horrible calls. And you could see here they're rated as a from Seeking Alpha, which again, right, you take that for what it's worth, even though Seeking Alpha is fairly trusted. And again, trusted it is in asterisks. Let's see here. They are rated 24,405 out of 29,000 financial bloggers. Okay, and they are rated 32,962 out of 38,000 experts. Their success rate is approximately 39%. So 9 out of 23 ratings made a profit. Their average return per rating is minus 28%. All right, guys, minus 28%. So that doesn't look so good. It definitely does not. What about the CEO? Right? Let's take a look at the CEO. Well, look at this. Back in 2016, Sam Adranji arrested on DUI cocaine charges in Hampton. That's right, guys. The CEO of Kerrisdale Capital. There we go. Sam Adranji, founder and chief investment officer of Kerrisdale Capital, was reportedly arrested early Sunday on charges of drunken driving and coke possession after a two-car smash-up in the Hamptons. That's right, guys. That's right. This is what we're dealing with. So obviously he's having fun, and he's making some great decisions. But of course, right, drug abuse may not have any bearing on their investment decisions. But I would like to wager that when you're doing stuff like blow, chances are you're probably not assessing the risks correctly, and you're probably thinking of yourself as being way smarter and more capable than you are in reality. Just saying. So yeah, I definitely wanted to make fun of Kerrisdale Capital because this is just par for the course, right? They put out a long tweet thread about how terrible specifically Bitcoin miners are, right? And what did they do? All they did was they had initiated a short position, which means before they put out that tweet thread, before they sent out all those letters, they initiated a position where they expected the shares of Riot to go down. Now, the parts where they're correct. Mining is a capital-intensive industry, okay? You have to purchase facilities. You need to work out contracts for electricity costs. Obviously, you need to have physical miners, right? So, and there's obviously the regular maintenance that goes on with the facilities and the mining hardware. So, the point is, indeed, it is I believe to be a heavy cash burn industry, no different than the automobile industry, no different than the airline industry, and not really different than oil and gas either, right? These businesses cost a lot of money in order to produce a return. Now, the other piece to it, where I think they are not incorrect, essentially, when they are not in profit, okay, they have to essentially mine at a loss, okay? So the miners have this delicate balance of constantly being able to maintain cash flows and liquidity within their company, but also at the same time holding on to the Bitcoin that they mine so that they can sell it later on when it's a more desirable premium for them. So there's a bit of this tightrope act that they have to do. Now, I'm explaining all of this to say, okay, we are right now entering, if we have not already begun, this cycle's bull run, okay? And of course, you could choose to believe this or not. It's totally your decision based on Bitcoin's history. Yeah, we're entering the bull run. We've begun. So to take a short position right now on these miners is probably a really bad idea. And I'll explain this. Even if Riot does have poor financials and is losing money, it doesn't make a difference because in a bull market, okay, the tide is raising all boats. Okay, that's all that's happening. The tide goes up, it raises all the boats, and what happens is that people become overly exuberant about these shares, and they forget about the fundamentals. So in the end, what is going to happen to Kerrisdale? Will they get wrecked? We're going to find out, but I'll tell you this: I do not have a lot of confidence for them having done this move going into the bull run, and I believe that they're going to regret it. Anyways, I am actually happy though that they do well, they claim to own Bitcoin. I don't know how they own it. Maybe they own it through the ETF. Maybe they actually custody their own coin. I highly doubt that. But it is interesting to see this play out, right? That they believe in Bitcoin, they don't believe in the miners, or they don't believe in the miners' ability to maintain and grow profitability. Oh, and sorry, the last thing that I didn't that I forgot to mention was this: it's not unusual for a company like Riot, which does have liquidity, to attempt to take over their competition. This is also something. Now, look, good companies do this and bad companies do this. And what I mean to say is this, right? You can have companies that are in financial straits, right? They're having a difficult time financially, they're bleeding money, and they will go out and purchase another company. And essentially, what that does is that creates a different public perception. Well, wait a second, this company's not doing so bad. Look, they're taking positions, they're buying over their competition, which means they're growing or they're trying to force themselves to grow. Either way, I would take that. I would take it all with a grain of sand. Obviously, you have to say this 50 million times, right? That this is not investment advice and blah blah blah. But look, guys, for me this whole thing is just about the game theory and how it's playing out. You have investment firms that believe in Bitcoin that don't believe in the miners, and we're getting these, to me, these very strange narratives. Yeah, Kerrisdale, I don't know, I think you guys are going to get wrecked shorting this into the bull run. We're going to find out, right? I could easily be wrong. Guys, that's what I wanted to talk about today. I will catch you next week.